Hey, welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the Franklin News Foundation. We're a 501c3 nonprofit, nonpartisan service. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com to support Everyday Economics. Please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, October 25th. Dr. Orphe Divounguy, my esteemed colleague on this show, is coming at you from the Atlanta Hartsfield Airport. Thank you for squeezing us in. Dr. O, you are an economist and a PhD. I always feel obligated to mention that. Hey, you're also, you're also, a rising star in the real estate space. I mean, every time I talk to you, you're coming at me from some other location where you just talk to a group of people about what's happening in the housing market. The headlines are easy this week, and what makes me happy to talk about this subject is you were one of the few voices who said, keep an eye on new home sales. There's tons of room to grow here. The builders are building, and sales are going to be up. In particular, new home sales. And look at the headlines this week. I'll just pick one from Barron's. New home sales are on fire. Existing owners are still sitting tight. Interesting. So what's going on with the American buying public? I thought rates were, we did get a little bit of a glimmer there. Rates are up almost a full point over the bottom, our most recent bottom, when we got down near 6%. They're sitting now at about 6.87%. I think is maybe just under 6.9%.
Yeah, that's right.
So what's going on here? Are we seeing the manifestation of the better rates that were available for about, 45 days, or what's driving this?
Listen. It's probably the best place to be if you're an investor. Like home new construction. I mean, I heard analysts on other shows talking about housing being the theme of the decade. And you look at new constructions, whether new home sales, whether mortgage rates are down or high or higher, right, increasing or decreasing. New home sales have been increasing since mortgage rates began rising back in 2022. They have been on a steady increase. When mortgage rates go down, demand surges. When demand surges, you get existing home sales increasing slightly and new home sales increasing as well. When mortgage rates go up, because there's such a big shortage of housing across the country, as mortgage rates go up, existing homeowners pull back. And so you get less competition for builders. And what happens to new home sales? They continue to increase. So it's like it's a win-win for builders right now. They're building the inventory, and they're building it at a price point that is conducive to transactions. They're building smaller, they're building taller, they're building at a price point that is affordable. Some of the best builders in the country, like places like D.R. Horton happens to be one of them, just concentrated among building, more affordable homes, at a lower price point. So builders just have the best of both worlds right now, because you have a
Are we also
shortage.
seeing, let me ask you this: are we seeing incentives now? Are the builders creating an advantage for themselves?
The incentives are still there. But this is the beauty, right, about this. Builders can build smaller. They can build more efficiently. They can build to match kind of where the demand is at, to meet buyers where they're at. They can add incentives, throw in incentives when the math makes sense, and so they do all that stuff to keep homes moving, right, and still make a profit. You see, and so I think that's the beautiful. So what I think is amazing about new construction right now is that it doesn't matter whether mortgages are increasing or decreasing. New home sales are continuing to increase, right? Last month we got a break with mortgage rates, so they increased even more than expected. when we don't get a break of mortgage rates, like this month, where mortgages are going to rise a little bit, builder confidence is going to be still in the negative territory, but
Right.
that hasn't stopped new home sales from continuing to tick higher. And so I
Right.
expect new home sales to continue to increase, maybe at a slower pace as mortgage rates increase, of course. But essentially, it's really the best place to be. The
But
best,
let me ask,
if you're an investor, like the new construction stocks are just where it's at.
all right, but this has to be largely driven by interest rates, right? Because the numbers almost align perfectly. If you go, this is the highest monthly total. What we're seeing here in the last measured month, September. It's the highest in 18 months, and it's been sort of that long since the rates were even close to being appealing. It's almost
Yeah,
like
it's
we've gone
it's
backwards a little bit in the last month,
well,
but nonetheless.
this month, yeah. I mean, the highest ever is because this past month we had a combination of higher demand and higher supply, right?
Yeah,
So
right.
sales go up. Remember, sales are a factor of both supply and demand. In previous months, when mortgage rates were higher, you had kind of constant demand, or maybe slightly lower demand, but still higher supply. And so things were kind of increasing slowly at a nice pace. And all of a sudden you drop mortgage rates a little bit and things heat up again, right? Month supply fell. So like sales are kind of exceeding even the pace. It improved a little bit faster than supply last month because mortgage rates fell. So that's kind of the state of things. But I think the big story here is that it doesn't matter where mortgage rates go from here. Builders are in a better position than part of this economy right now. The new construction is really in a good place because you still have a lot of people trying to get into housing, and then you have builders that are basically responding to demand where it's at the right price points. They're building the types of units people want to live in. They're filling the gap slowly but surely. They're filling the gap, and I think it's a beautiful thing. And again, remember, I've said this on the show before.
I want.
Yeah, go ahead.
I wanted to slip one last question in here. What is this this price? What's this price point? What's this range? Of course, it's going to differ from market to market. But I mean, are we talking about the bottom end? Are we talking about kind of like in the middle? We're certainly not talking about luxury properties at this point. We're talking about
No,
I mean to see these kinds of numbers.
Yeah, I mean, it depends, right? It really depends vastly across the country. But the ones that are doing the best are the ones that are building in the more affordable space, right? And so, if they're able to, but in major markets, some of the major markets, these expensive markets, where there's not a lot of construction, but you have a booming tech industry, you have, with the Fed starting its rate cutting cycle, you have some of these industries that are coming back on fire, like the tech sector, right? I mean, we just had earnings, bank earnings, I think, this past week. I mean, look, the economy is strong. And so in some of these top markets, luxury properties are doing just as well. But yeah, it's, just in general, I think on average across the country, it's relatively more affordable, where things are still hotter than you might have thought, given where mortgage rates are at.
All right. Well, let's call it good.
The lowest here.
All right. Thanks, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of high-quality podcasts at americastalking.com.